Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly support, from which all these moves to the upside were created, that now that the market has broken it to the downside is currently turned resistance. So what we could expect in a situation like this is to see the market go for a retest of this previous support and resistance, as it is already doing, and then to create a rejection to the downside away from this zone. We can also notice that, generally speaking, as we have an impulse to the downside and a correction, if we want to measure this correction, we have to take our Fibonacci from the high to the low of the impulse leg, which shows us how we have the 0.618 and 0.5, so 50% retracements from a Fibonacci standpoint, lining up exactly here with this previous monthly support turn resistance. Now, this creates confluence of resistance instead of this level that we could expect the market to want to go and test and then to reject to the downside. So from a monthly perspective, everything looks quite bearish. Dropping down on the weekly, what do we have? Now, here on the weekly time frame, we can see a very clear impulse to the downside and also here a very clear correction. As we did previously, if we want to measure this correction, we have to take our Fibonacci from the high to the low of the impulse leg, which also here on the weekly shows us how we have the 0.618 and 0.5% from a weekly Fibonacci standpoint, lining up with previous weekly support. In fact, from here, all this previous move to the upside was created, which is now turned resistance. This means that at the moment this market is inside of a strong confluence of resistance level from which we could expect a potential reversal lower away from this zone. Dropping down on the daily time frame, what do we have? From a daily standpoint, we can see how at the moment we actually have bullish structure. In fact, we have a market which is currently above this previous level of daily resistance, which now that the market has broken it to the upside is turned support. Now, until the market will remain above this support, we could expect more bullish continuation. So what we actually need is for this market to create a potential break below this support. Only if we get a break below the support, at that point on the retest of this previous support and resistance, that is where we have good probabilities of seeing more potential institutional shorting, as we will now see just in a second. Now, I also did speak about USDCHF a few days ago when the market was around this area, and I explained all the reasons for which we could expect this move to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for the CHF, we can see how with the last reports, overall the CHF has been getting stronger. We went from minus 10.2k net positions down to minus 4k net positions. This shows how institutions are moving their positioning back to the bullish side of the CHF, with 1,200 shorts getting closed with the last report and 184 longs getting opened. Now, this longing of the CHF with shorts getting closed makes the CHF stronger. And a strong CHF is exactly what we need in order to get more institutional shorting of USDCHF, because always keep in mind that when you're looking at this data, you're actually looking at CHF USD. So if institutions are longing CHF USD as they're doing here by increasing their net positions, they are actually shorting USD CHF. So if we get a break below the support on the retest of this previous support and resistance, this is where we have very good probabilities of seeing more potential institutional shorting of USD/CHF, further increasing the probabilities of a potential move lower. So if we do get a break below the support on the retest of this previous support and resistance, how we could be approaching a potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment the time to join with the current offer is almost expiring, and directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I definitely suggest to go and check it out, as the time to join before everything expires and goes back to normal is almost finished. The link is also in the description at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.